Interesting. Anyways, guys, really quick, if you're interested and have not already, make sure to take a second to join our free Telegram channel. I just want to post this really quick. Actually, the QR code right below my camera here, you can join the Telegram if you're interested, or we'll also drop the link here in the chat if you are interested. The reason I say this is that if you're somebody who's interested in fundamental analysis or learning more about macro, which is something that we do a lot here on the channel, I highly recommend that you join us in this group. We're sharing, you can see, a daily digest kind of thing. I have a really talented writer on our team who's very macro intelligent, I guess, very macro savvy, doing commentary each day about what's happening in the markets, macro wise, as well as technicals wise. That's moving stuff. So take a second. If you haven't already, it's completely free to join. Here's the Telegram channel. You can scan the QR code or click the link in the chat or in the description of the live stream, whatever is easiest for you. I just know a lot of people watch these from like a television or a computer where it's just easier to scan with your phone. So feel free to scan the QR code there on the screen. Okay, guys, up next, well, I should say, I'm not going anywhere, but we're sticking around with the one and only Chris Pulver here. So I'm going to bring him in and see what he's got to say about this morning's movements. What's up, Chris?
What's happening, Nick? Happy Friday, man.
Happy Friday. PC came in pretty much in line with expectations. No big surprises there. I guess, what are your thoughts on this week so far? What have you, we've got a little bit of a pullback, not too much though.
Yeah. I mean, yesterday, despite the gap lower yesterday, everything was pretty well contained. I'm looking at futures live right now, and they are popping up a little bit. There's a nice little 15-minute downtrend. I mean, I think as long as we are, I mean, what do you want, Nick? You want the market to go right back to all-time highs? Do you want the market to actually have a pullback? Just asking.
I'm a fan of a pullback. I got long oil yesterday after our conversation, though.
Okay. I actually put a pending order in myself. It hasn't been filled yet, so I haven't added that to the Pulver alerts, but I'm looking at an oil futures trade. Similar to what I have going on in December, but I was going out to, I think I looked at a March and April or March and May expiration. I'm essentially just trying to stay out of the way for a nice income trade, like a couple $100. Yeah, I think it would be maxed out at like a $700 risk, max of $800 profit, and as long as oil stays above $500. So
yeah,
I mean, $50. That's all I need.
Yeah, I mean, I think in terms of just on the oil side of things, I got long yesterday, shallow dip yesterday, but it quickly was bought. I kind of got lucky on the timing. There was a little bit of Europe-Russia flare up in terms of drama, but I think you still have, you have a break of this range that we've been in. I really like the macro outlook with that GDP number that we got this past week or yesterday. I think you've got a setup that favors rising oil prices. You've also got a little bit of a firm uptrend happening here in the dollar index if you're looking at like the lower time frames, which I think also is supportive of oil for the same reasons, right? A little bit of higher expectations for some firmness in the U.S. economy. Yesterday we had a round of good data for the DXY, so we'll see. But that's kind of where my focus is right now. I would, to your question, I would love to see a further pullback in the indices. I think there's plenty of areas to get constructive on it. But I would love a 5% pullback to this area. That would be awesome.
Sure. Well, I think if the dollar continues to go higher, we will see that pullback. I think that's kind of how this thing pivoted hard, was that retest during FOMC lows. We tested that July level on the DXY. So if we head up into 100 plus, I think, it's not really percentage wise, but if we head back up to 100 plus, I would see at least some of those moving averages I've been talking about on the indexes. So I've got my screen here. So pulling back to 100 plus, maybe 101, 102 on the high end, just taking this swing from high to low. Let's say we pull back 30 to 38%. Well, that's anywhere between 100 and maybe high 101s. If we look at a pullback on the S&P, we did actually poke the 21 period on the SPY yesterday. And, this morning's price is going a little bit up. Like I said, I was going to futures this morning. Everything looks like it's on the rally. So we got a 0.41% move on S&P futures. So we have a gap higher on SPY, gap higher on SPX, S&P going a little bit higher this morning. But, poking the 21 is, I told traders this yesterday, are we going to see a consolidation top before it actually rolls over to having like a more, obvious support break? Or I thought if we just had like an orderly pullback, as in high, low, lower, high, lower, low, lower, high, lower, low, whenever it's done, pretty good opportunity to start looking for support here. Take the position back up to the upside. I did post a trade yesterday for S&P. It is all the way down to like 50, 55, 75. That's my line in the sand. It's 60 to 75, $60 to $70 income trade, which isn't a lot, but it offers $1,000 profit trap in case things get a little bit dicey. Otherwise, it's just a steady income trade. So you see that in Pulver alerts this morning.
Cool. Yeah, it's we'll see how it all shakes out with with the PCE number. I think the market is VIX is down. I think that's part of the reason you're seeing a little bit of a relaxation in the indices, making a little bit of a rebound push. Maybe a little bit of uncertainty was in yesterday's sell-off ahead of PCE. So we'll see. VIX down almost 2% this morning. You've got precious metals pretty much unmoved. What are your thoughts on gold, by the way, Chris? Are you doing anything with it?
Yeah, that's a pullback. I'm not doing anything at these highs. I am looking at I posted a dollar cost averaging on GLD pretty much at every moving average. There's a pretty good spacing here. Previous resistance, we'll talk XAU. So previous resistance around 34.50. Look at any of these moving averages. I'm trading GLD. So any pullback into 318, pullback into 310, 300, 290, 260, like a lot of puts, a lot of naked puts if you have the cash to own. Otherwise, allocate. I'm putting in a $1,000 to $2,000 per level and give myself like another chunk. So what's interesting is this gold run that we've had here the last couple of years. I've been riding this thing. I'm hoping along with a lot of other retail traders that are benefiting from this crazy bull run. But I haven't been nearly as large on gold as I have been on silver. So I think for me, silver is inching its way up towards these highs. I am looking at some profit taking. If we look at the weekly chart, this is a measured move for me on SLV at 44. But what's cool is I go back here to this 2011 all-time high, which with XAG, it was like a $50 spot price. And up here, I've got a 48. So between 44, 48, I'm putting in trailing stop losses on SLV. This one is up around $85,000 right now. I want to protect most of that. So if we get into 44 to 48, I'm probably crossing six figures on this trade. I want to protect it. I'm still going to keep an allocation. I think we talked about this last week, but that little pie chart allocation of, I'll have a mix of equities, and then I'm looking at my mix between gold, silver, Bitcoin, and I think I'm going to go 50. So 50 equities, so I can mix that up between S&P, NASDAQ, Dow, and Russell, and then a mix of, I'll probably keep Bitcoin around 20 for me, 10 for some managed accounts, and gold and silver making up the other like 30 or 40. I don't really need to complicate the pie chart more than that. A question for you. Are you non-US right now? Do you have any non-US exposure in your portfolio?
I don't, but I want some. Okay. So I'm watching, a good bit of stuff in terms of foreign indices. Let me see. Like if I look
what
at
do you like? If you're looking at non-US, what do you like?
There's a couple things. I like Brazil. I've always liked the idea of having a little bit of Brazil in the ETF, EWZ.
Yep.
I also like. I'm not a huge fan of China after the run up. I don't know, man. It's hard. For a little while, I was really liking the DAX, but European data has come in really soft here recently. So the DAX is pulling back though. So like if you did like it, it's pulled back a little bit more. If I take a look at UK equities, I'm not a big fan of the UK in general, but it's hard, man. Like I really struggle with like which area, if I wasn't to go US, do I want? Because there's just not a lot of growth in a lot of places. One place long term that I actually think there's a lot of potential is actually India. INDA, the ETF. If this were to, honestly, it's already pulled back a good bit. We're talking about a pullback of 12% from the highs. They have like massive GDP growth compared to a lot of Western nations. So I like the places that have GDP growth, to be honest.
Sure. I had an interesting stat here. So based on this is all from Vanguard, just looking like a, outlook deck from Vanguard. based on the valuations we have right now, I know that everyone's trying to say like, well, this is AI, this is different. You know, these companies are so much more profitable than they were during the dot-com bubble, which I agree with. I mean, the companies that have led us here, got us here, are the biggest companies in the world. The market cap is insane.
Yep.
But we'll talk about this. I know we're doing a big session here in November. I'm gonna highlight a lot of these visuals. But the forward-looking earnings, the forward guidance, as far as like what the stock market is capable of returning after having 20+% 2023, 20+% 2024. If we claim double-digit gains for 2025, meaning like we have minor sell-offs or we have a little bit of slowdown, but we rally to the end of the year. If we finish the year strong and at double-digit highs, that it really doesn't continue to do that. And from a 70-year average. Some of the return projections that I thought were interesting. U.S. equities return projection is like 3 to 5% moving forward, which is obviously like half of what the average move is. But the global equities would be, we talked about if you want to throw some Brazil in there, some Latin America's ILF. China, I've had some really good runs in China. I'm still in it. I have Alibaba and Baidu, JD.com. I had some KWeb, which I got rid of. FXI I got rid of. So I'm really just riding out some Alibaba and Baidu right now on JD.com. But I mean, SCHY is a Schwab ETF that allows me to have some Europe and China exposure. I like India. I didn't put any in the portfolio, but I'm just looking at the chart here. I mean, pullbacks into the 200 moving average. I think India looks pretty solid. I don't know, like, this whole idea of how hard is the U.S. going to play against BRICS? It's like, how big is BRICS number one? Is it going to be this? Is it going to be like this contentious future where we don't have anything good with India, China? We're just trying to, isolate ourselves even more. I don't know.
I think, Chris, the thing, I think if we're thinking about international, equities, to your point, we talked briefly about that. You came with some more stats today, which is awesome, because we talked about that yesterday, just briefly, about this concept of like when you have high valuations in the short run, PE ratios are not a very good fortune teller of what stock returns are going to look like in the short term. But in the longer run, they do have a sort of like a 10-year, like a 5 and 10-year stretch. They typically do give you a better idea of forward-looking returns, at least through history. And so we are sitting at very high valuations. So 5-10 years out, no guarantees, right? Anything can happen. But I would mostly agree that I think U.S. stock performance will be less impressive in the next 10 years than it was in the previous 10 years. I think you've had a lot of excitement around the new technologies, and sure, new technologies will continue to develop, but I think a lot of it is really excitable right now. To your question about which areas I like, I had to think about it, but I think I like Latin America, and I like a lot of places that are commodity centric, because in 2000, when you had that period of really underperformance in U.S. stocks the previous time, what worked really well during that time was commodities. You had other stock markets that did well, but specifically like, places that have access to a lot of commodities, like Brazil, for example, a lot of Latin America. These places, I think, have the potential to do well. So I like pullbacks in EWZ. I think that if you're going to continue to, this is the other thing. If you want to bet international, you're also sort of betting bearish dollar. Not exactly, but a bearish dollar typically favors if you like international stocks, because a weaker dollar is just a major tailwind for other places and commodity prices. So, I think I like oil. I like copper. I like the idea of spreading out into commodities and not having my whole basket parked in U.S. stocks. I think that's, to me, is the smarter play, is to still keep the U.S. stocks mixed in, but to diversify.
Yeah, I think that my strategy for U.S. stocks will change to more of a 10-15% margin for error, generate income on them. I think you can't argue with the liquidity of U.S. stocks. You can't argue with the optionality of U.S. stocks. That's what, to me, that's what makes the U.S. stock market still superior. Yeah, there's already crazy stuff that's happened in 2025. I don't think that this whole idea of like, you hear people talking, trade non-U.S. The dollar is going to get debased. The agenda is, we'll weaken the dollar, onshore manufacturing. This is good for global economy. And based on our valuations in the U.S. here, yeah, we probably could see some outperformance. But I feel like people have ignored that for 15 plus years, the US has been the only performer in the world. So I get like a little rotation, non-US is fine, or this rotation into value is understandable. But I mean, you've had people screaming for value stocks, value stocks, value stocks that have received no price appreciation in 5 or 10 years or more. The outperformance of large caps versus small caps, it's been it's like the widest margin we've ever had. So I mean, I get there's simplicity to, well, tech is overvalued, go to value instead. I don't agree with that, because I feel like the liquidity, I mean, buying great companies at a discount. The one thing that does have me nervous moving forward, especially with these lofty valuations, is the amount of capital that's being spent right now. I think I pulled a screenshot of this week. Let me see if I can find it. This is the capital expenditure of revenue. Meta is leading this AI arms race with 35% of their sales they're spending towards investing in AI. I mean, this is, I'm not saying this is Zuckerberg's metaverse all over again, because obviously the metaverse was a complete disaster when it came to, just insane amounts of spending into the world that nobody is in right now. It's like we're in the physical world again. But this AI arms race, I mean, it's crazy to see how Meta, Microsoft, Google are justifying, like, yeah, we're going to spend 20 to 30% of what we make and just invest it into AI. Because eventually, it's not yet, but eventually I think this becomes, well, hey, look, these companies have spent hundreds of billions of dollars. Where is the ROI for investors? If that ever becomes a difficult selling point where you're not seeing the ROI, you're not seeing that, this is leading to additional revenue. Instead, it's like, well, it gives them a stronghold and maybe the AI arena, but not necessarily translated into better profit margins, which we don't know. This is the big uncertainty that I don't know if investors are going to see through this, if there's just too much money being spent. But I don't think they can afford not to spend. That's kind of the weird catch-22 right now with this whole AI race. So this is the Mag 7 rotation. This is where I think if they spend too much, they don't show the return on it, then Mag 7, by the way, is like sitting around 30 times earnings versus the average S&P is like 15 or 20.
It's been a tricky couple of years in terms of trying to bet against the Mag 7, right? I mean, it's literally just been an undefeated story for some time. However, I think that it really, the landscape is changing a little bit in the sense that what was an environment where you kind of had rising interest rates, which just, in my opinion, just straight up favors Mag 7 because they don't need to borrow money, and all these other companies are more sensitive to it. I think that lowering rates might actually see a regime shift if the economy holds up. If the economy holds up and you're cutting rates, the place to be would be, you beat me to it, Russell, right? Like if you've got a good economy plus lowering interest rates, the Russell has potential to explode, because again, these are companies that are valued much cheaper than the Mag 7. And if you are, correct in that trade, it's been a really, really long period of time where Russell underperformance has been a thing. But again, going back to that 2000 to 2010 period, Russell outperformed massively during that time to big caps.
Yeah. And I mean, if this is a resistance level that's about to break, even just this swing from COVID, low to high, there's symmetry. I mean, Now I will say that the Russell is not going to go to 300 without the S&P and the NASDAQ going with it. Now they might not go that explosively, but I think if the Russell can get to 300, you're going to see, probably steady upside trajectory on the S&P and the NASDAQ, maybe just not to that pace. So that's really the catch up, which is, the market broadens two ways. It either broadens when everything falls and everything that's already been beat up falls less, and everything that's overvalued falls aggressively, or the market, like the rising tide rise, or the global PMIs that have been going up, this kind of rises all ships, so to speak. And if large cap is going to make this, kind of plateau while small caps catch up or mid caps catch up, I think that upside looks pretty attractive. So, and again, I'm not buying these highs. Like, I do have some Russell in. I bought it during this is actually one of the few indexes that I bought at the lows during April sell-off and hung on to it. Problem is, I started selling cover calls around 220. So I'm still caught on the, in the money side, but I'll continue to roll those calls for income. And I'm also playing some ratio spreads and other ways to, sell some puts and get some income exposure. And if we go up to 300, the nice part is the break above the upside. I mean, you can trade that a lot of different ways, but have a nice, nice price target. So I think 300 to 325 makes sense to me.
Chris, I got to show you something that I'm
Let's see it.
very excited about. So the stock box is something I've been working on behind the scenes the last few years.
Yeah.
It's finally getting to a point where it's looking pretty cool. So it's really for macro traders, and for financials, stock financials people and macro people. But what's kind of cool here is I built this screener with heavy amounts of help from a much more talented developer, to essentially look at all the economic data and then to rank if they have a bullish or bearish impact on stocks. Right now we have sort of a mixed, just slightly favorable environment for stocks, but nothing to write home about. The costing areas are going to be your jobs data points. Things that are looking good are, for example, GDP growth, retail sales. Like we've had some good spots and some negative spots. But I've been working on something that I'm really excited about, which is a scoring matrix for sectors specifically. So based on this list of data points, each one of these things impacts things a little bit differently. Like retail sales is going to be way more impactful to consumer discretionary than it is to, for example, healthcare stocks. So what we've done is we've then built out this little screener that looks at this collection of data and determines which sectors may be more attractive currently based on the environment. So if we go top sectors, check this out. So what we've got here is sectors that are getting higher scores, meaning the list of economic data that we track is favoring these areas. So currently the things, and we could take out the indices if we wanted to. So I'll just take out the indices. Things that are looking more favorable, at least right now, based on the macro data points that we track. And I used AI to help me score all of this stuff. So it's, did some good research on that side of things. Consumer discretionary, which has been kind of an underperformer. Real estate, tech still looks good. Regional banks, industrials, semiconductors. These are things getting higher scores, and then things getting lower scores are things like healthcare and energy. I still like energy from a contrarian play, but I just thought this was worth sharing for those who are interested in sectors and ETF trading. And I wanted to get your thoughts, Chris, because your thoughts mean a lot since you've got quite the experience. Concept being, take the macro, study it, and filter it into how it could impact individual sectors for rotation trades potentially.
Yeah, no, I think that's awesome. I think that at your fingertips, having that much research top down in one like really easy to distill graph. I do want to ask, just consumer discretionary at a score of 12. I'm looking at year-to-date performance. Consumer staples, one of the least performing. It's like negative for the year. Also healthcare negative for the year. Discretionary 5.29. Is it because some of the, is it weighted just like the sectors are? XLYs has certain index weighting. So are some of those companies like fundamentally looking more attractive? Can you give me a little bit more of the guts of why XLYs got such a good score?
Yeah. So the top sectors is using exclusively just the macro side. Now, maybe the next step to what your question was, the natural next step would be actually looking at specifically, the average, and we have this data too. So let me just think really quick. If I go to my stock analyzer and let's just say Nike, which is a consumer discretionary stock, we can look at like Nike and look at the values of these metrics compared to its own 3-year average, as well as the industry average. So we do have the industry that it's in. So like if I wanted to look at Nike and say, is this stock a potential buy? It still has a relatively high PE ratio, even though the stock has fallen. And it's still also higher than the industry average. So the goal here is to give stock traders and ETF traders the ability to just scan metrics on the financials and on the macro, right? So economic. So the top sectors is much more oriented towards, how is GDP stats going to factor into consumer discretionary, so on and so forth. Whereas the stock analyzer tool allows you to look at, individual financial metrics based on a specific stock you might like. We also have a top stocks tab, which will look at stocks that are getting good scores based on a collection of technicals, sentiment, and financials. So all the financials that we have also are ranked and filing for individual stocks. So let's say, just as an example, you like let's say you like, I don't know, technology. Like if you're choosing technology, now it's going to give you a list of stocks that are getting higher scores than others. So it's similar to Edge Finder, but built for stocks and ETFs.
I do love it. Actually, I'm just going to ask, I want to spend some time offline and just do a run through with you, because I would like to add that into my mix. I think that's a good way to filter. Also, I can't remember the exact phrase, but there's always that question of like buy low, sell high, but that's good for futures. That's good for Forex. That's good for like purely technical markets. But in stocks, it's like momentum is such a strong thing that companies like this year, the companies that have made, 52-week highs and continue to make 52-week highs, those are probably the horses you want to keep riding into the rest of the year. The thing that people are cutting right now are all the crappy performing stocks. We're like, oh, it's undervalued. Well, it probably will stay that way because there's a reason that it's down 20, 30, 50% this year.
I mean, look at the stocks that have been hitting 52-week highs, or I'm sorry, 52-week lows, like STZ, right? Alcohol stuff, Accenture, Target, UPS. These have been losers. Like I know you know this too, Chris. Like these are not losers that just started losing. They've been losing for like years.
Sure.
So it's really interesting to your point. Momentum is a serious thing. Like JP Morgan has been a winner for like the last 5 years straight. Sure enough, it's still at the all-time highs, 52-week high breakout. So yeah, no, if you're, we can definitely talk about this. And also, by the way, this is already able to be bundled for people who want to get access to Pulver alerts. You can get Stockbox with it too, and take advantage of that bundle discount. For those interested in Stockbox, I'm imagining there are some people who are interested. We've been working on this for the last 2 years. It's finally at a point where I think it's awesome. It's really come a long ways, and with Chris's help, it'll get even better. So if you guys are interested in getting access to Stockbox really quick, here is the link to send a direct message to our support staff if you have any questions. And if you're interested in doing that, you can also speak directly to our team about getting access to Pulver alerts as well. You can actually bundle both of those. So yeah, good stuff. Chris,
nice.
Would definitely love to get your thoughts on that in terms of what to do next with it, because we've gone a long ways. Oh, sorry, I think
look, it looks great, man. I know it has been in the works for a couple of years, and I'm happy to see some more showcasing. But yeah, I want to spend some time on it with you.
Yeah, would love to. Chris, we're at the end of our segment. We got our next show host taking over here. I know you got to run as well.
Sure.
Have a good weekend, man. Thanks for coming on.
You as well. Go USA. Ryder Cup weekend.
Yes, sir. All right, guys. Up next, you've got FOREX James taking over the stream, going over some setups he's watching. Stay tuned just after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Happy Friday. I hope everyone's well. Hope you've all had a good week. So it seems the dollar is a little bit indecisive today. We are seeing a little bit more downside after yesterday's run. And that was off the back of GDP and jobless claims, if I'm correct. So I did reposition this morning. Yesterday, I was a little bit unsure on what I was exactly going to do in my positions, but I decided best thing to do for me was to close out of the majority and reduce my risk for the weekend. So I've still got my S&P long. This one is still running fine. I did actually add into this with a very small position just when we had this drop. And I've just entered the pound Swiss as well. So I just placed this one as I was about to come on the show, which I'll run through maybe shortly. The Australian dollar CAD, I closed this. So I had a swing trade on this one with a stop loss, take profit. I closed this one at break even and decided to reduce my risk even further and just go with more of a DCA style. So again, you can see it's a very small lot size. Dollar yen, same thing, just a DCA just to see if we can get some more dollar downside. And I'll go into my thought process on these trades a little bit more as we get further into the stream. Same thing here with the Nikkei. I decided to close out of this trade. It was too range bound. I already had quite a lot of risk. Well, a relatively large amount of risk on this trade. So I decided to completely close it, break even, and then re-enter again with a more of a DCA style small lot size and see if I can build up a position over time rather than having a fixed stop loss and entry. So hold on, let me just check the chat. Ball out. Good to see you, my friend. I hope you're well. Hope you've had a good week. Slugmeister, same thing goes for you. You saw my psychology video. Well done. I appreciate that, ball out. Thank you. Yeah, took a bit of work, but it seems to have had a good reception, which is nice. So for the dollar, I was doing a little bit of research last night and this morning into what was going on in the thoughts or in the brains of the big boys, the smart money that we all hail to. What are they thinking about the dollar? Well, it seems like their consensus is pretty much exactly the same as what Nick and Chris spoke about. I think it was yesterday, and then I reiterated basically the same idea that we are going to see. And I don't know if I can actually find an exact segment, but again, I was reading through the bank reports, and it seems like the sentiment is that yes, we are going to see dollar upside in the short term. So we could absolutely see the dollar come towards 95 to 100. And then we're going to see it start getting pressured again. Of course, we had the data come out yesterday, which did cause a little bit of a repricing in the markets. So if we check the, what's it called? The CME FedWatch tool, which I will open right now. Looks a bit unprepared. Hold on. The CME FedWatch tool has indicated a little bit of a decrease on the next rate decision. Nothing major. We can see here it's gone from 91.9, so let's just call it 92, and it's now at 87. So it's a little bit of a decrease, nothing overly interesting though, but that does tell us we're seeing that small repricing going on, causing some slight dollar bullishness. But yeah, again, overall, I am still expecting the dollar to go down towards I'm going to say sort of 99, well, sorry, we're already at 98. I'd say back sort of to 98, 97 area. When I say long term, I'm talking maybe 3 to 6 week type time horizon. So we will see how that develops. Coach Tiger, good to see you. Sean's here as well. Good to see you, Sean. Chris, Mazin, cool. How's everyone doing? So, what was I saying? I was going to elaborate. That was it. The Australian dollar CAD. So I know a lot of you obviously watch Nick, and I'm sure a lot of you are in Nick's Discord. So I'm sure you've seen his trade in the Aussie CAD. Nick and I trade in a very, very similar way for any of you that don't know. But what I want to show you is something that it will back up that idea, which is Nomura Research. So they've put out a report. This is quite an old one now. So it's from 2 days ago, from 24th of September. But you can see, if you're on this stream, you're ahead of the institutions because we were already looking at Australian dollar CAD. And they actually have been in since 25th of January at quite a good price down here at 0.8996. But they've raised their level of conviction to a 4 out of 5, which of course is good, meaning that they're more confident in that trade. And of course, they are relying on that central bank policy divergence has further to run. I'm not going to read through all of this, but feel free to pause or screenshot or whatever you want to do. But basically, what I'm trying to say is the Australian dollar CAD does seem like a very good trade. And I've got the targets already on here for you to see. So we've got Nomura Research entry was down here on the 25th of July. They've trailed their stop, so their stop is now at 0.905, and they're looking for a take profit at 0.935. So we do still have quite a way away for a potential take profit there. So I'm still really happy with the trade idea. But again, I had to close out my trade yesterday just to reduce my risk. We did see a bit of a turn in the markets. That was my signal to start reanalyzing, get out of the markets for a little bit, research on the weekend, and then I can go forwards next week. Anyway, let's move on. Oh, random Moscow. Well, there you go. I just gave some Aussie CAD insights. again, I think the theory for the trade, or the idea for the trade, I think is still very strong, and I think it's still got a lot of room to the upside. For me personally, it was coming down a bit too heavy, and again, I already had some positions on that were starting to turn against me. So the best idea for me at the time was to just get out. Any reason why you particularly use Pepperstone? You know what? Yes and no. There isn't a reason I chose Pepperstone specifically, but I've tried different platforms. I had MetaTrader. I've still got MetaTrader, but I use Pepperstone and TradingView a lot more now. I've tried CTrader. I've just not really found anything that I really like to trade on. The only thing I found really actually was the IG spread betting platform. I really liked that one, but it was a little bit limited in terms of the analyzing tools. And obviously I was moving out to the UK at the time, so I closed the account. But yeah, Pepperstone, I clicked on the brokers and I was like, you know what, let me try it. Because the reason I actually chose TradingView was because one of Nick's videos came up on my recommended. And I was half asleep. I was going to bed and I was like, you know what, fine, I'll watch a Nick video, give him some ad revenue, and then I'll go to bed. And it actually looked really cool. Looked really easy to manage positions, type in the risk that you wanted, etc. So there you go. And the big benefit of this, the thing that I was like, you know, that's pretty cool, is that I can show you everything I'm doing. You can see it all in real time. I mean, you can see my positions tick by tick. It's all, you know, it's all easy. It's just, what's the word? Consolidated a lot of my trading into one thing. So it's just a win-win, really. Get the research from Forex Watch. I'm actually not sure exactly where it comes from. My not business partner, but the person that I run Elite Traders with, or helps out massively in Elite Traders, is the person that provides them for me. But I think there's a site. In fact, you know what? Yeah, I'll put you on something here. This isn't promo, by the way. I don't know this company, but I do know they provide them. So if you do want bank reports, this site provides them. It's called FX Watcher. I think it's $100 a month, so it's definitely not cheap for most people anyway. But that's where you can get it. Or you can join my Discord and get them included in the price. So up to you. Anyway, again, I'm not affiliated. I don't know them. I don't get any kickback or anything. That's just a source that I know. Hey, James, Pepperstone, ending trading. What? Oh, they have a subscription offer. I'll have to have a look. I paid for TradingView myself. I didn't know there was an offer on, so I don't want to miss out on some value. Ball Out, Ninja Trader, and Thinkorswim. I've never used either of them. Aren't they more for futures and stocks and things? I don't know. I'm just going to ChatGPT as a AUD CAD prediction. Yeah, I mean, that's one way to do it. I'm fairly sure you're going to get research from about 2 years ago from some Reddit thread, though. I don't think you're going to get any real value from that. Anyway, let's focus. Let's go back to the charts. So the dollar Swiss has remained back inside this downtrend channel, rejecting the 0.8 level almost perfectly, actually. If it wasn't Friday and I wasn't looking to just reduce my risk, I would probably be going short on the dollar Swiss right here with a stop just above this previous high, and I'd be looking for pretty much no take profit, really, but somewhere down to clear these previous lows, I think is very, very sensible. It's a great trend. The fundamentals are there. So yeah, I quite like it. Pound New Zealand, I'm not too interested. I think we are going to get some sort of, I don't want to say reversal, probably let's just leave it as a pullback for now on the dollar crosses. So New Zealand dollar, pound dollar, euro dollar, I think they're all very stretched now. Regardless of fundamentals, I think technically we need to have some sort of mean reversion. I'm not saying we're going to reverse all the way back to the high, but we could get some sort of pullback to maybe 50% or the 200 moving average, somewhere in this area. Wouldn't surprise me whatsoever. Of course, I'm not going to try and buy this. Maybe if I was a bit more risk tolerant or as a bit more of a gambler, I would attempt it, but I'm not going to expose myself on a Friday. CAD Swiss, I think we spoke about CAD Swiss yesterday. I do still like the short idea. I think the Canadian dollar is still struggling. We do still have a lot of downside. Speaking of Canada, what's oil doing? I saw someone in the chat speak about oil, but I'm not really an oil trader, so my insights are very limited. Let's just see what the Edge Finder has, because I know it was bullish yesterday. I'm not sure if it is still there. It It is. It's actually increased. I think it's increased now to a score of 7. So oil might be a good long, and I'm fairly sure I saw Nick in a long as well. So that's always a good signal as well. So we could maybe look for a long of either the 200 or a 50% retracement. If you wanted to go down or be a bit more aggressive, you could look for something like this. So maybe we could get some sort of double bottom. We've already had a break and retest of this previous high. So there's a couple of different options that we could trade with oil. And I might take a long position next week. The next sort of major level would be this next high at 66.5. I think that's if you're a short-term trader, that would be a good target to have. Or if you're a longer-term trader, you'd want to watch this level to see if it can break and then continue up to the high around 70.5. You could maybe even go higher towards 80. But again, I'm not an oil trader. I don't have the fundamentals to back up a longer-term trade like that. Hey, James, next time you're taking a shower, look at the shampoo bottle. Most likely it has 38.2 fib retracement. You know, I see 50% retracements everywhere in life these days. It's getting to the point where I can look at the chart and see roughly where that 50% line is. It's quite handy, actually, but it can also be a bit annoying. Anyway, China 50. We were looking at this. I've been looking at China 50 on and off for a little while. I've just not had the let's say confidence to pull a trigger just here, but I missed my previous entry. I think I was looking at something like this, and I was wanting to see this 50% retracement, which we did have here, but I didn't see it. I didn't get in. So next up, I think a long entry, something like this could work out quite nicely. Again, we've got a bullish trend. The edge finder's there. We are making higher highs roughly. It's definitely not smooth and it's definitely not clean. But we've got highs, higher high, and then we've obviously created a pretty strong resistance through here. But we've also created the low and now higher lows as well. I like the idea, but again, it's just spooking me slightly. Pound Australian. Yeah, we can have a look at that one. I don't think I've really got much for it. However, I think longs make sense just from my immediate thought. And the reason I want to go long, or I would lean towards going long, is just because the UK is facing some serious problems. And I say this in every stream. I probably should get some sort of PDF or list of things that I actually mean when I say that. Because when I say there's problems in the UK, I don't mean problems that you'll see on the edge finder heat map, for example. I mean more structural problems within the political landscape, and public perception isn't really the right word, but the what's the right way of saying this? Maybe like the general health of the population, or financial health, maybe. Anyway, I'll try and compile something for next week to try and explain that in more detail. But yeah, what I'm trying to say is I think the UK has got some serious problems, and it will, I'm 100% certain it will reflect in the data at some point. When? I don't know. And as for the Australian dollar, I think we are seeing, or we could see further strength with Australia. The only downside for that is if we see the US dollar start to continue rallying towards 100, you'd want to sit out of going long on the Australian dollar. Wait, hold on. Sorry. Was I saying long? Sorry, I got my direction mixed up. I meant to say short pound Australia. I'm getting almost Friday brain. Please forgive me. Anyway, enough yapping. Let's have a look at the eco surprise meter. Deception is the right word. Well, again, I'm going to keep it quick because I don't want to get on a tangent here, but the UK yesterday announced that they're going to do, or they want to do, digital IDs, which is absolutely ridiculous because we've got driving licenses, we've got national insurance numbers, we've got passports. How much more would you need? And it's specifically so employers can make sure the people they are hiring, so the prospective employees, are legal in the country. It doesn't make any sense to me whatsoever. Anyway, again, I'm not going to go on a tangent there. So the UK has got a score of 40, which is okay, but it's not great. Australia's actually got a really bad score, but as we looked at with the Australian dollar, Canadian dollar trade, I think I'd more play this on the side of the central bank policies rather than it being just off the economic health of the economies. So I think going short somewhere like this, if we could get some sort of pullback just above the 50 into this previous high, I think a short position makes sense. I would quite like that. But it's definitely not up there on the list of I really want to get in the trade. It's more of if it happens and I see it, I'll take it, but I'm not overly interested. Swiss yen looks good. You know what? Actually, I think I can take a little bit more time on the stream today because I'm the last guest on. If that is wrong, A1, guys, feel free to pull me off if I'm going over too long. But just bear with me for a second because I saw a report today. It might be this one, I'm not sure. I'll show you this one anyway because it is regarding the yen and some people might find it useful. It's actually by Nomura again. So the yen intraday comment, policy debates continue while USD yen's volatility remains subdued. The Bank of Japan's inflation data today poured cold water on inflation hawks relative to her opponents. When was this from? This was 2 days ago as well. So it's a little bit outdated now, slightly. Anyway, that didn't give you much interest. Oh, sorry, much insight. Anyway, I'm going off on a tangent again. But yeah, I think there's some questions about whether the Bank of Japan is actually going to hike rates this year. And I'm seeing more and more discussion about them not. And it'll be more towards more in 2026 than this year, which will keep the yen pressured in the short term. Again, I'm just going to check this with you on stream. Oh no, there we go. Japan economic update, key policy calls maintaining for the policy of prioritizing escape structural deflation stagnation. Monetary policy full-scale rate hike cycle towards neutral interest rates would not begin until 2020. This is what I was going to show you in the first place. There's a couple of other reports and a couple of other institutions saying pretty much the same thing, that they're not expecting the Bank of Japan to hike rates until 2026, which again, as I said, will keep the yen pressured. So when it comes to Swiss yen, CAD yen, yen pairs, even the Nikkei, I would be quite happy to be a buyer until sort of the end of the year, or until we get more signs that we could see a rate hike. So whether it be higher inflation or whatever, I think something like this would be good. The problem with Swiss yen, and I've said this many times, but I was very wrong at the start of the year on Swiss yen. I was a big advocate for being short, and it didn't work out. I mean, it's part of trade dumps, it's not a big deal, but I fell into a trap on Swiss yen where I was so convinced I had a really good idea that I wasn't able to flip my idea or to change my idea for too long, and I ended up missing all of this rally. And now maybe I've realized it too late, but either way, I'm looking to be a buyer at some point. I just need to see a more reasonable pullback. In hindsight, this would have been a great place, but I wasn't really involved with Swiss yen at that point, so I didn't see it, or wasn't paying attention anyway. USA is following James. Oh, down the wrong path. I see what you mean. Yeah, I don't know. I think the US is in a much better state for its people than the UK right now. We know why the UK is doing it, because they are losing their identity due to the wrong path their head is trying to control. Yeah, I think they're panicking, really. I think they've seen the mass protests that are happening here. They've seen a lot of unhappiness within their population, and rather than trying to come to some sort of conclusion or middle ground or anything like that, it's more a case of, we are the government, we are in power, you are going to listen somehow, we'll make it happen. Which is obviously the wrong way to go about it, because then it just causes more tension and more problems. You love his thumbnails? Who? Nick's thumbnails? Nick does have some good thumbnails, actually. Yeah, the West is facing some serious issues, but I'm not sure where it was. Somewhere in Asia. I can't remember where. There was protests over there as well a week or two ago. Anyway, again, let's keep on track, because I don't want to sit here for the next 40 minutes and ramble with you about nonsense. So Nat Gas is still on the watch list, but as I keep saying, I'm more waiting just till the end of the year to potentially position. I've not really seen anything on a fundamental view to support going long right now. Gold and silver, obviously, still great long positions. Gold is still just rallying. It's tricky. This could be a great long opportunity for shorter term traders, because if you look at the way gold behaves, we seem to have these periods where we have an aggressive run where it's very difficult to get in, especially for longer term traders like me, where we need to see some sort of H4 pullback, which it doesn't happen when gold's rallying. We just don't see that behavior. So I end up missing these moves. Then when we do end up getting some sort of relief in the market where we could see, yes, maybe we could get in, we end up with this situation where it's just untradeable, really. Well, untradeable for me anyway. So yeah, this could be a good option for maybe for a shorter term position. I'm still very, very certain that we're going to see 4,000 on gold. I would love to say by the end of the year, but I think maybe a bit optimistic. We'll see. But we are heading into rate cuts. Entered long on gold at 37.35. Okay, so yeah, nice. That's a pretty good price. Am I cooked or not? It looks like it's still bullish. To be honest, I think you're with the trend, you're with the fundamentals, although according to the edge finder, the fundamentals for gold aren't super, super strong, but you're still in the right direction. The entry could maybe be a bit early, but it's as I said, if you are in the position now and we see it run, I think you're basically golden. You can just sit back and enjoy the money. But if you are caught in a pullback, I would say that's even better because then you can buy it at a lower price. Not financial advice, of course. Ball outs in from 37.42. Okay, so it seems like we've all had pretty much the same idea of buying this probable dip. Wishing all of you gold buyers luck. Yep, I wish you all good luck as well. Puts a large position. Oh, sorry, puts a large portion of my funds in it. $400. It's like 1/3 of my portfolio, but it looked too good. Oh, Jaden, that's a risky one, but if it pays off, it can pay off well. See this, and again, I don't mean to get sidetracked here, but I know this is probably not the right thing to say. But if $400 is like 1/3 of the money that you've got in trading, it might be worth putting it into a trade that you are super, super confident on. And again, not financial advice. I'm not saying this is what I would do, but I can see the argument for lower capital traders to put larger amounts on. Again, if they are very, very confident in the idea. But according to risk management and proper trading principles, obviously that's a terrible idea, but I will leave you to come to that conclusion. It's your money, your analysis. Anyway, so yeah, silver has absolutely smashed all the targets I had. We are coming up to the third quarter of 2026 target, which is the 2011 high. I think that is that the all-time high on silver. It is actually, yeah. So it seems in between short-term pullbacks and a bit of noise, I would pretty happily say that silver is going back to its all-time high, maybe even higher. So I'm a little bit salty because I did have a long position on silver down here, and I cut it because I took it on Friday morning and I cut it on Friday evening just because we're approaching this high, and obviously on Friday it can get a little bit choppy. In hindsight, that was a big mistake. I should have held it, but yeah, I'll be 100% a buyer if we can see some sort of retracement. That's very true, ball out. Actually, if you've got $400, well, actually, I'm not even sure how much the edge finder costs these days. I think I bought it for, I don't know, I can't remember. I've got no idea actually. But yeah, I think investing in the edge finder is probably a better move rather than trying to go full margin. By the way, you can get a nice discount if you use code ELITE. That would also pay for my weekend food. If I had $400, in my opinion, I would find a job, stay down. Yeah, I mean, you know, he very likely does have a job. Most people that are lower capital do have jobs, because I think it would be ridiculous to be involved in financial markets and not have some sort of support financially. Not new to trading, been educating myself for a year, been intraday trading, I've got a steady job. There you go. See? Yeah, Jaden, don't worry. I think you're fine. If you're very confident in the idea and it's not your life savings or anything like that, then who is to tell you what? But again, I think from standard principles, obviously not the best approach, but whatever. each to their own. Let's see. So we do have New York Open in 4 minutes. So I tell you what, we'll watch New York Open together, and then I will maybe call it today. Depends if there's any requests or anything, because I'm the last guest on today. So I don't think I'm on a strict time limit. There's a guru on YouTube with a Lambo, so you can turn $1 into 100K in 10 seconds. Okay, so we are seeing a nice bullish pre-market on the Dow, and we've not had that much of a price change on the Nasdaq, but we did have a bullish pre-market. So we'll see what happens once the New York guys step into their offices and start clicking buttons. I wouldn't mind being a buyer actually of the Dow at some point today. So I'm going to see, again, I'll just see how the market opens, and maybe I could look for some sort of long trade to end the day on. Been learning myself, watching news and stuff, but I'm also staying up to date. I made 108%. Was at 1400 with into profits. Amazing. Cedric, have I been cutting? What do you mean cutting? Did you mean cutting positions? 108% in 2 months is fantastic. But the only thing I will say, Jaden, is don't get your mind clouded, because I think, again, this is one of those problems that a lot of traders can fall into, especially when they are trading lower capital. It's very easy to make high percentages on small amounts of money, but then they won't consciously see the change in their capital really, and they'll expect, I can make $20 on a $50 account. It's a huge return percentage wise, and then they'll expect to continue meeting that same percentage when they have 5,000, 10,000, which obviously then it starts becoming a bit ridiculous, because of the risk you take monetary wise is a lot higher, and it can cause more damage. Anyway, I don't want to sit here and lecture. I'm sure you know what you're doing after a year and a half or whatever you said it was. Cutting calories. No, I've actually been increasing calories. I've got my winter blubber. James has on another level. Yeah, I need to get a haircut. I was meant to get a haircut on Monday, but I just got busy. Couldn't do it. I don't like to go for a haircut on weekends, because that's when you got kids that are off school and parents. It gets busy. I don't like to be around people. I like to go sort of out of hours. But yeah, I've just not had a chance this week. You look skinny from the angle. Well, I appreciate it. I'll take the compliment. I'm not sure if the scale would agree, but that's all right. Anyway, what are we seeing? So we've got, actually, market open is now. So let's just see how we get the open to form. Yeah, Bola, I mean, I understand what you're saying, but everyone starts somewhere. And to be honest, if you're still in the learning stage, I would say $500 to $1,000 is kind of an ideal place to be, because the money you have on the line, it can still buy you maybe a sandwich or a coffee. So you can still understand the value of it. Whereas if you're on a demo with $1 million and you see $50,000 drawdown, you don't care. You've got no emotional attachment, so you don't learn as quick, or you don't learn at all. So I'd say, yeah, pretty sweet spot, really. Nasdaq is taking a beating. The Dow seems to be quite flat, although the Dow normally will pick up after the Nasdaq's had its move, or its initial move anyway. So I'm assuming that my S&P trade's also taken a hit, slight hit. Although Nasdaq is relatively flat on the day, again, in terms of its percentage change. So actually quite an uninteresting open, really. It would be interesting to see if, Nasdaq can come down to these lows and have some sort of rejection. So that'll be the daily low, and then continue higher for the rest of the day. Loris, I actually would disagree. I wouldn't say 108% in 2 months is luck. I mean, obviously that could be a big part of it, but again, as I was saying, on a lower capital account, it's much easier to make a large percentage, because even a 0.01 lot size can be a large portion of the account. And if you're taking 2 to 5% risk, that can obviously be, or typical 2 to 5%, then it can be a significant return. Anyway, so nothing overly eventful on the open. So what do we have going? Aussie CAD's quite flat, dollar yen's not doing anything, and my Nikkei trade is slight profit. So I think with oil, as I said, we'd be looking for a pullback. I'm really contemplating taking a position on the China 50. I'm not going to do it today, but yeah, I think next week I might be executing a trade there. I'm not in dollar Swiss, so I'll remove that for now to avoid any confusion. New Zealand US dollar. I still like the idea of being long on the euro pound, not right now. So I'm looking to see if we can get some sort of retest here, which will obviously lead into a break and retest pattern, and then potentially take it back up into these highs. The pound dollar, maybe I would be looking to go short after a pullback. Aussie New Zealand, I'd still love to be a buyer, but again, same problem we've had on gold. There is just no meaningful pullback for me to get in on, so I've missed that trade entirely, which is a bit sad. But yeah, anyway, ladies and gentlemen, I am going to head off because I don't really have anything else to cover, and it is Friday, so I'm going to go, and I don't really know. I don't have any plans for this Friday, but either way, guys, enjoy your weekends. Have a good one. Stay safe. Don't get margin called, and I will see you on Wednesday next week on this stream. Have a good one. See you later.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.